Boom. We're live, ladies and gentlemen. This is Tio and the Arcane Bear. Yes, I'm going to look at some charts today. Welcome. As per usual, we are following the crypto sector. I'm going to do a bit more macro analysis for today as well. We'll take a look at a little bit more micro because it does offer a lot of really fast-paced learning environments. Although those learning environments are less reliable for the information that you are actually trying to gather data from, they do still represent a perfect place to study things in a much more rapid developing area. So we're going to do both that, macro and small minutia timeframes. And so just as per usual, let's start over taking a look at Bitcoin, our industry leader, and the collateral layer so far. Now that's pretty perfect. Don't need to do anything else. There's lots of other things we can build to do other things. For now, Bitcoin's doing great, being a money. I like that. So these two big trading ranges we've been going over the last few episodes, and some of the fractal nature. Now, these macro perspectives are important because in the previous videos we've made kind of a parallel between this area of 28,000 to 40,000 approximately, and around 42 to around 60,000 approximately, compared to 2017's around $2,800 to $3,600 and around $4,300 to around $6,000. There's these really big developing areas of a fractal. We went over scale and variance and how nature kind of repeats itself. And because we are generally measuring some type of physiological response to emotions in the world that we live in, from, let's say, things like pandemics or so-called double spends or pools dumping that result in some type of news, but they actually often happen in one kind of like a wave. The news hits the tip of the wave, but it's not necessarily the momentum that drove that wave. Anyways, it's a whole another podcast and YouTube channel, I'm sure. But from here, I think what's interesting is, first off, I believe we're just forming a secondary backup phase over top of our primary trading range. That's we've gone over in the previous video as well. So for those of you that are new to these types of videos, we love studying the Wyckoff trading ranges. The idea that what you're witnessing is basically a development of supply and demand characteristics and interest in each new visible area. And that's why we like using the volume profile on the other side, because it's showing our supply profile for these particular trading ranges and where it kind of builds support and how it climbs above them. And right now we can see the primary area of support on this trading range is around 43,000 to 49,000. The fact that we came right back up to the top of here, hit that, very likely to me that we will come down and want to test this area. Very similar to what we saw here, two kind of quick secondary tests. So as we start to use the minutia or the minute time frames, we can see, and again, non-financial advice, what I'm often looking for is repeating cycles and patterns in nature. So as a musician, as a percussionist, no matter how abstract the timing might be, whether it's a 7 or maybe we're going to count a 9 by 2 5s and a 4, what we're looking for are these repeating cyclical patterns that have a variation of each other. That's where Elliott wave theory comes from. Again, another form of fractal or scale invariance. So here, I think we're going to hit a buying climax. We start primary shakeout, primary shakeout, probably have a secondary test of this area before a nice run into the automatic rally. I think we're going to get something almost identical to this side. Now, the question that we always want to ask ourselves, well, is this going to be a failure of the trading range? And what we do to try to give that a bit more insight is continue to go into the smaller and smaller time frames. Now, you guys had asked me about some of this stuff before, and we went over it. One of the polar bears in the den shared this here, which was a nice upthrust, and the supply signature, especially as you get smaller and smaller into looking at these time frames, you get to start to see the areas that we practice of effort versus result. So right now, it's probably even clearer on the 15-minute. Yeah, okay, here we are in the 15-minute, and what we're doing right now is looking at the top part of this trading range, this section where we broke down. So we have these areas we call micro distribution, which are, in my opinion, these functional patterns of distribution on a small scale that don't yield huge distributional events. I'm almost always only interested in watching the 4 to 6 hour because it can remove a lot of the noise for me, and I can try to make further bets, or let's say, like kind of future telling moments about what the market is going to do without having to look too closely. But do not forget that in each one of these smaller time frames, there's an opportunity to learn something. These are micro distributions. They're not the big distributive pattern we're looking for, but they do yield big downturn events. Here, 22%. But we saw this back at the beginning of this as well. So if we go back to the other trading range, for those of you that have been joining, I think it was just mid-December. Where was this? No, okay, started January, end of December. You had this smaller distributive pattern come in. It looked like a really nice rounded top. We made a few posts about it. Anyways, it was this moment here. And then when we couldn't get back above into this trading range, it was pretty clear that we were going to come down. But again, this was a micro distribution. This was part of a much bigger trading range. And recognizing both of those things at the same time is extremely important, because otherwise it's really easy to get confused by the wording, especially if we're looking at distribution or accumulation patterns, right? So this was a micro distribution, and then this was a micro accumulation, basically, right? Like a micro aggression. These time frames in the 15-minute where you're looking at areas like this, they can provide us a valuable learning experience, but are less reliable. So what we do now is we go back to that, to what we're witnessing on, let's go back to the top area here. And now we're likely witnessing a very similar event where we saw a micro distribution on the top, further distribution, an area of reaccumulation, and so far it actually looks quite powerful because it's been both totally above the box so far. Now again, it's this larger time frame that is the one that is much more interesting to me. So we can go in and you can learn a lot really quickly by being on the 15-minute, but just don't trust that those are going to be the ones that end the bull market. And that's all I'm really interested in. I'm not interested in, is this trading range over and is this new one started, unless I'm building long positions still. And then even then, I'm interested in what's the larger story here, because then, yes, this would be an accumulation area for me, and I feel very confident buying more here. Now, there's just so much good news for Bitcoin, and one of the kind of, should probably dedicate an entire episode to this thought, but one of the questions I've always asked myself is, what will the world look like if Bitcoin were to get to $1 million or $14 million per se? Are the rates of inflation, how do we as a society deal with an evaluation of like that in the currency? When you have the US dollar or the USDT, you have these kind of abstractions in what we believe wealth is, and that has always been the case. What fractures that is usually sentiment around the culture itself. So if Bitcoin were to get to $14 million, what does the social contract layer look like? How is the human species reacting? We've seen Bolsheviks revolutions before. We've seen big chaotic falls and breaks of currency in the past. What does it look like if it happens in the future? And one of the things I want to always keep in mind here, or maybe not always, but at least every now and then double check in with, like, the reason we like Bitcoin, like deep down, is because we know that this game of just printing and giving from the government side isn't going to work. The government or even a private company shouldn't be involved in that. Dogecoin does make a better currency than the US dollar, 100%. At least it's inflationary to some degree. That's another entire episode, but just be aware that the further and further Bitcoin goes up, the more dramatic we're going to see a kind of a change in the social structure. So keep that in mind. I don't think we're going to see it. It's not going to be fireworks this year, even if we get to a few $100,000, which I believe is of a high potential for a very short period of time. We would not be up there for more than 10 or maybe 15 days at most before we came collapsing back down to like maybe even where we are right now. So this is still a really beautiful accumulation area for me. So I try to always do this kind of accordion into and out of the market, start broadly conceptual, talk with myself to some degree or another, or actually I guess more so with you guys, talk with you, share with you my kind of thoughts and process of the macro aspect of how are we interpreting wealth, because that in itself is a really big question. You don't need charts to look at that. You can kind of visually see it in different cultures and how it expresses itself in different people's relationships and life, to the more technical data science version, which is what we're doing here, is just looking at individual assets and people's psychology based off that. So I do, again, believe that we are in a much larger trading range right now, forming the backup phase after a very beautiful accumulation just to the beginning. And then as we go in the 15-minute, for those of you that are studying, you can always learn more here. It's just you have a much less reliable data frame. And that to me is not as important, although it can be pertinent for you to see that there are these smaller trading ranges taking place. Like, for instance, this would have been a smaller trading range, right? This would have been a smaller. These are smaller trading ranges, and this is why I think retrospective study can be super powerful, just to keep an eye on things. But they're significantly less reliable. So you can have patterns that may look like a perfect reaccumulation on the 15-minute that just totally invalidate. So the smaller the time frame, the less reliable, but it also gives you the opportunity to go and kind of retrospectively study just small areas of time. As long as you stay on a macro time frame, I think when you finish your kind of, let's say, your prospectus, your thesis for where you are, you have a much clearer picture. It's much easier to see things up from a bird's eye view instead of looking down at the dirt, in my opinion. Although I love the dirt, I love planting things in the dirt, I would rather be accumulating them way back then when they're near the dirt. We are quite high right now in terms of market cycle. I think let's say 9.5/16 the way through the bull market or something like this. 9 3/4, I don't know. So because we're like in the middle of a market cycle, I always want to try to end with my macro. Now, in August, when we were back down here, we were starting with the macro cycle every day. Here, we've been starting more and more so with these minutia levels because we're in a very important time frame. These things can change very, very quickly. So this is where these smaller time frame studies can be of use. If you are following along with us, practicing, learning on your own pace, in the private group with us as well, follow these middle trading ranges. It's always something valuable to look at there. I just try to stay away from this style of charting. It's because unless you very specifically say to yourself, oh yeah, where are we in the larger market cycle? This is really important. We just started the bull market back here in March. We had the breakout of our primary trading range here at around $10,000. We've been in this bull market since we left that trading range approximately 130 days. In the previous bull market, we were around 360 days from leaving the box. We were around the same percentage gain from the box today that we were then, almost just basically 10x. Right? We were at $2,600 to $3,900, and then we were at like $4,100 to $6,000, and then we had these final like breakout moments that just shot us upwards of 20 grand. And I have a eerie feeling that we're going to see something quite similar. It's just this big, and then all the buying power just totally dissipates, and it comes crashing back down to like, say 180, 80, 70, 60 to 120. 30 for bounces, automatic reactions, and all that. So I think we're a long ways away from the end of the bull market still. Now, in the other tokens, it doesn't look as clear, but I think what we're witnessing here is that first off, it's a really exciting thing, and I should go over this more frequently, that you can do and be a part of venture capital here, that you can make these kind of small bets where you're, again, putting $100 in Doge or like $1,000 in Doge in 2015 wouldn't have been like a smart idea. But here, we're not trying to be smart. I think here we're trying to participate and experiment more and more. And I think that that's such a valuable function in this ecosystem, that you have such a high speed of things that are evolving, that playing around with the technology is extremely important as well. And that's always, I think, been one of the interesting parts about here is, okay, well, this technology allows things like instant seed stage venture capital startups to anybody in the world 24 hours a day, 7 days a week, if you can play that game. And now you actually have the ability to enter and exit a potential seed stage play in the first few years when these companies are already supposedly billed out at billions of dollars. Well, that's all a hallucination. That's not true, right? We know that's not true. But the ecosystem grows like that. And this is kind of one of the things the bull market does. It bolsters the interest of what the ecosystem can do and what it looks like. And Ethereum and the other plays like Link, Avalanche, that are basically built around Bitcoin, what we're doing is, at least in what I'm doing is speculating on the future of venture capital in the financial sector. I don't think Bitcoin solves all the problems. I think it solved one very important problem, but not all of the financial problems. And more importantly, not all of the social contract layer problems that this technology can help do better with as well. So I'm interested in the long, decade cycle here. So Ethereum right now, I think its weakness is actually showing due to the hands of the retail investor, and more so probably the pocketbook. You just are going to have times of expansion and contraction in the psychological norms, like around Christmas. The the expansion of capital comes right before the 25th, and then afterwards it kind of dies out until springtime again. And we see these in other areas like GDP. We often look at market sentiments in the VIX to follow some of this stuff along. I've made many connotations that the idea of the spring is ultimately more than just a characteristic in the mind, but it also happens pretty much once a year. For those of you that are interested, if you want right now, think in your mind later, look up the Machu Picchu trade. But there just seems to be these cyclical natures of time. So Ethereum here is I think a really early rendition of what Bitcoin was going through, which is, look, these are still asymmetrical bets. I wouldn't put too much in anything unless I was willing to lose it in here, because Ethereum could be replaced. It's not been around long enough yet for me to think, oh yeah, this is clearly the winner. So I haven't come to that conclusion yet. But from a venture capital standpoint, they've got a lot of great things going for them. The brand's been around for a long time. Vitalik is obviously a very intelligent individual. They've got most of the developers who've been building the Ethereum virtual machine, but you can copy the EVM, you can build it on top of other blockchains. So there are areas where you're effectively. So when I think about venture capital, primarily, it's always asymmetry. So I want to explain these things because I think they're quite complex, but they're very simple thought patterns, right? Asymmetry means that it could be worth nothing to me. So I'm okay with whatever I have in it going that low, even if it's a lot. Okay, because that's the bet I'm willing to make with where we are at this moment. Now that changes over time. So one of the fun things is that we always know the volatility to the downside is basically zero. So I play with that as my stop loss when I'm looking at these more abstract plays. If I'm having like these longer term leverage plays lying underneath just small parts of the portfolio, or trying to like hit home runs every now and then just because it's entertaining. I like venture capital the most because of the philosophy and more of the conceptual aspects behind this style of playing in the ecosystem, which is that if you're okay with losing it, that's your stop loss. These should be thought of as decade-long plays as well. And Ethereum's just finally coming around the corner on like 5 or 6 years, right? 2016, that's when it launched. We got like just on the start of 5 years. It's like a 5-year-old kid running around. So that time on like the interest of the investment, I think, is such an important thing or characteristic to keep in mind, because Blu-ray and DVD were amazing, and then they were both gone, right? There are many instances where both technologies get replaced quite quickly. Could happen with Bitcoin. Why not? Anything can do it. And that's kind of always one of the weird aspects about this game is the universe can be exceedingly random at times. So with the venture cap idea in mind, we try to lean into the fact that we do recognize that the world, can be random. We can't tell the future. These things are extremely volatile, but the upside potential is almost unlimited because of how early on seed stage entry allows you to basically participate with. And that's such a unique feature, I think, that needs to be really driven home. So I wanted to also include that in today's macro perspective before we dive right in, like look at more of the structure that's taking place here with Ethereum, because fundamentally for me, more than the fundamentals of like Ethereum, the token itself, are the fundamentals of the problems that we're trying to solve with this technology, and can it do it, and which is better placed to do this or that type of thing. Because there are lots of different problems, however big or small, these technologies can actually help work with, and that's important to keep in mind. It means that there are likely going to be a lot of different functioning algorithms that play together to get the, like say, the most functional user interface a few years down the road for how Web 3.0 might look. Ethereum has been a clear leader in that. I didn't even really see Web 3.0 with things like MetaMask up until recently, even though you had CryptoKitties, you've got all these NFTs, these video games now. So we see obviously that many different industries are finding the value and function of what these, I guess, more venture capital style plays can do, right? So as an individual, you can't get away with putting in a stupid amount of money in some of these, and you wouldn't want to. Like GRT, for instance, right? I don't want to have an enormous amount of capital in GRT. A small amount of money here over the next 5 or 10 years, if I'm right, is a big payoff. And I don't try to load into accounts. So one of the things I did here the other day was I just took out some of my initial, because when you get a venture capital play that goes 2 to 3x, if you take out your initial, you're usually never well, first off, you can just chill out and relax for the next 5 or 10 years and see how right you were. But you can allow the fluctuation of the price to go drastically pretty much in either direction, without feeling too silly about your game plan. Now, again, one of the kind of the functions and the nice parts about venture capital back in the day was you couldn't chart your venture capital budget. You couldn't even sell it necessarily. If Twitter was worth an enormous amount of money, or like the evaluation, you couldn't even find someone to buy that much stock from you until it went public. So here in GRT, it looks like we're starting to see distribution, right? And these might be just minor moments that we get as the weakness. Like, is GRT, are people building on it? Is this extremely overhyped? Are we going to get these breakdown moments that bring us back down to here before continuing a much larger market cycle? And it's very possible. We've actually witnessed this many times before, where the SOS in the backup phase can shoot all the way back up and then come all the way back down for much bigger targets. We've seen that through 2017 and into now. If you just look at how Bitcoin has performed over a multi-year segment, you have sometimes these big blow off tops. Link was another great example of that. Actually, let's take a look at Link. Here's Link all the way back to May 2019. So May 2019. Yeah, look at this. This is look how Link performed here as well. You've got your primary trading range back here in 2019. Here's your trading range that you broke out of. Here's the SOS, your first SOS, your second SOS. Boom, up 520%, and then a decline for, like, what is this? 9 months, 10 months. 250 days, yeah, before another explosion of price here. And again, right back to test this area. And this actually looks like the spring to me, which is crazy, just because of the volume signature down here, before you finally had your tests out and then your final SOS. So these structures often become bigger trading ranges. So here with GRT, you could see a return down to here, a bigger trading range start to form, even over the next 6 months, while Bitcoin does its thing, whatever happens. So I definitely don't want to neglect how similar these things start to look. It's all about what time frame you're in, right? So what I've started to do, and I might do this more frequently, is just take out my initial and then walk away. And it can be anywhere here. Because I really like this venture capital idea of just small amounts of money freaking everywhere, signaling to the market that I actually don't know. I think it's such a humbling experience, and it fits the asymmetry philosophical concepts. Like, if you guys have gotten the chance to read Nassim Taleb's work, I commend you. If you haven't, I suggest it. But I really think that there's an appreciation of mathematics and the understanding of how kind of numbers work to some degree. And look here again, you have these big dramatic character changes with recoils back and new trading ranges that are formed before breakouts. We could just be witnessing again, same with Link here, another larger trading range. And that's super normal, right? Here, what was the time frame here for Link for this one? 149 days, right? So you could see something that goes like this now, another 120 days. We see a cycle like this. And this is the fractal and the scale and variance nature that I've talked about here. That's why you always want to be able to go into and out of time frames, but more importantly, go out of the time frame. Recognize how high all of this is, I guess, is a great idea too. Look where Link started in 2019, and this is why venture capital is so good. Who cares about exiting sometimes? If you get an entry here and you try to take an exit fully here, you're just going to screw yourself up. When you can do with you can just make entries and try to accumulate for a really long period of time. And even back here in March of 2020, you're talking about a 1,300% gain. Yeah, it's astronomical, right? Very, very high numbers here. So I don't get too worried about the venture capital plays. In fact, that's why we always play with whatever we're willing to lose to the downside, because that's the best way to play and allows you to play for the long term and have made the I don't know bet. Anyways, hopefully that was helpful for all you guys today. I was a little bit more of a conceptual macro perspective. Again, you can use the smaller time frames, but I much prefer keeping a bird's eye view on things. It makes it feel a little more clear-headed, even if we do see some of these big returns down, like or again, which will just look like a new trading range. Basically, it's not that concerning to me. If we start to see other further breakdowns in the market, like especially on the macro sector, here you've got the VIX up another 8% today. Right, so we've seen these big cataclysmic spikes in the human psyche this entire last year. Look at here's 2019, the peak of December 20th. I'm not even sure what happened there, of the VIX. So this is the volatility index. You see a clear downtrend that had started to some degree, and a breakout of the volatility index. I wonder if we can like chart fear. We can maybe know that something bad is coming soon, judging by how long. It's like, guys, everything's been normal for too long. Like, we might see something go bad here sometime soon. And that's kind of one of the more outlandish conjectures I do make on this show, is that what we are witnessing is human consciousness interact with the fabric of reality, ladies and gentlemen. So don't forget that either. But here on the VIX, yeah, we're back up testing this long-term upward trend line too. So this is a pretty important moment, the springtime here. Usually, in my mind, I'm going to assume, at least where we're sitting in the bull market, that this is a positive thing, because people get to go out into the sun, enjoy themselves. COVID rates and numbers drop because of the vitamin D, and people are hopefully getting good sleeps and all the other fun things. Avalanche, yeah, again, I think we're just witnessing a bigger trading range. This was clear. If we look at these as individuals, again, this was clearly a small distributive pattern, and here too, a small distributive pattern. So I'm just being patient. I'm all just apparently prepared to be okay with chewing up a bunch of lost capital in the meantime, because I've been here long enough to know that it's like a time game more than anything. And a numbers game. Time and numbers will do you great. Anyways, Tea with the Arcane Bear, thank you all for joining us on today's abstract of an episode. Yeah. Keep the VIX in mind. That's all I'm saying. Aside from our industry, like, if you know that a big part of what's leading us is people's interest in the markets, you want to keep an eye on this, because it's almost always, it's like always relevant. I haven't seen it not be relevant yet. So yeah, it's great. Oh, and just one quick question. Someone asked, what's being built on Avalanche? Well, it's that any of the things that are built on Ethereum can run on Avalanche. That's what's been built on Avalanche. So everything that's been built on Ethereum can run on Avalanche. Okay. Yeah, that was the key point that kind of really sold me. I was like, oh, they could actually just move over here. You wouldn't have to go in and out of roll-ups and back onto the Ethereum chain. It's basically another blockchain that has an Ethereum virtual machine on top of it. So you get better speeds, but you can still use all the coding that we've already developed for the rest of these financial Legos. Okay, I like that. Seems good to me. But yeah, this was these are definitely were smaller distributive patterns. Inside each, I think we're probably going to get a nice range bound move here, and again, very similar to where were we looking? Yeah, it was back with Link. Yeah, the VIX is just jacking up 40% today. 40% increase in people's fear in the markets today, relatively speaking. That's wild. Yeah. Anyways, keep that in mind. Stay with the Arcane Bear. Had a lot of fun with you guys today. Give us a thumbs up if you like this content. Subscribe. Or don't. It's up to you. But if you like this, I'm going to be doing a live stream every day. So click that little bell and get to hear me rant about all sorts of wild things, apparently. Just, what was my saying? Oh, yeah, I am not the streamer. I am the stream. This is Tio and the Arcane Bear. Thank you all for joining us. We'll see you again on the next episode. Boom.